Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's see, it's going to be a hectic weekend this time around, but let's get started with your stocks. Ashu and Rajat both join in to answer all the stock-specific queries that are being sent in by our viewers. Gentlemen, good afternoon to both of you. Let's get started. We have a query on Wockhardt, Shravan, sent in by our viewers. Gentlemen, good afternoon to both of you. Let's get started. We have a query on Wockhardt. Shravanti CH has written to us from Hyderabad. She says she holds 100 shares in Wockhardt, which she has bought at 900 rupees about a year back. She's a long-term investor and wants to know what she should do with it at the moment. Ashu, let me come to you first. What do you think of her buy price? I mean, it seems quite high at about 900. Do you think she might get to see it again, and therefore should she remain invested?
See, difficult call, not easy to say, though. I mean, the last 2 years struggle of pharma sector looks to be over. But between the pharma sector also, if you look at Wockhardt, it has been a struggler. I mean, this has been an underperformer vis-a-vis, I mean, it started with Sun Pharma and spilled over to, I mean, Dr. Reddy and other pharma stocks also. And one thing is for sure that we feel that the lows, which are recent lows made by pharma, I mean, the sector will now perform well. But Wockhardt is a difficult call still because it is not performing as per the expectations of the pharma sector too. But I would still say that it is very prudent to hold Wockhardt, and probably at a lower level, maybe at some dip or some knee-jerk reaction because of the market or some sectoral shift, just average it out. And I feel that in line with the rest of the stocks, Wockhardt should also improve. I mean, as I said, that the underperformance, it's behind the, I mean, it's in the past, it's water under the bridge. So I would say that pharma would outperform, and all these, this currency favorable movements also helping them. So I think everything put together, I would say that hold Wockhardt Pharma, and maybe at a lower level, try and average it out so that maybe at a better price, you are able to exit, I mean, as per your acquisition price.
All right, Shravanti, I hope you were watching this and this answers your question. Ashu says hold Wockhardt. With that, we move on to the next one. We have another caller, Mr. Ravinder Singh, calls us from New Delhi with a query. Mr. Ravinder Singh, go ahead.
So I'm holding 2,000 shares of Equitas at the rate of 149, and I know to the outlook of this company for the next 4 to 5 years.
Okay, next 4 to 5 years. So long-term investor. Rajat, on the charts, how does Equitas look from a long-term perspective?
Well, Equitas is currently in a downtrend, and from a long-term perspective, I would say that the chart since its listing has been seesawing between say 130 and 175 on the upside generally. So as of now, what I would say is that since the lower boundary is 130, if it were to fall below that, he should seek an exit, because this kind of a chart that has scaled up the highs 3 times, lows 3 times, so you never know which way it would actually break out or break down. So even from a longer term perspective, I would suggest hold it with a stop loss, that is 130, and if it were to cross 175, so much the better.
All right, so hold on to Equitas. That is Rajat's advice, and he has mentioned the stop loss as well. All right, up next we have a query on Quick Heal. Bhavika Shah has written to us from Gujarat. She has 65 shares of Quick Heal, which she bought at 321 rupees. So she bought this about, I think, a year and a half back. She's a long-term investor and wants to know what she should do at the moment. So just making a slight loss at the moment. Ashu, is there reason enough for her to remain invested here? I mean, can she make good, or could she see a higher alpha perhaps somewhere else?
The company's performance has been decent, and I would say they are into IT security and probably coming out with the models, the lower risk and lower cost models. So I would say in the times to come, that is, they are in the right field and they are coming out with the other newer products also. So I would say though it has underperformed, I mean, considering the sector where they belong to, we were also expecting that it should outperform many of the peers, or probably because they are into the niche business technology. But somehow it has not performed as per the expectation. But my call would be that to hold for some time, that sooner or later you would see that suddenly there could be a spurt in the stock. But again, I would say that even if somebody is a long-term investor, don't hold this kind of a stock which has not performed. Because if you look at, I mean, the previous query also, when we talked about, I mean, just now you talked about the stock. One should be in a stock which can give you a multi-bagger story. I mean, even after 2 years, if it is consolidating and hovering around the same price, nobody likes to be in that stock, and ideally one should not be. So I would say that wait for right time. I expect the price to bounce back, and somebody should be able to get exit, but hold for a while.
20 points higher on the Sensex, and of course with the kind of recovery the market has seen, individual stocks to look at Titan. That stock was trending, in fact, quite weak through the session, and now it's at the high point of the day. It's recovered 5% actually in from its low point. But let's get back to answering some more queries. Pallavi Verma has written to us, and I think she has a query on REC. So the question she has is that she has 2,000 shares which she bought at 135. She's been holding on for a year, a long-term investor, and wants to know what she should do at the moment. Rajat, what's your call on REC? Does it make sense at all? And you know, she's making 51,000 in terms of a loss. Would you recommend that she shift elsewhere? Okay, Rajat, my apologies to you. We'll come back to you in a bit. Trade data is coming through, and for the month of August, the trade deficit has come in at about $17 billion. Lata is here with us as well. Lata, how does this number look to you?
Well, actually, it's a little better than the 18.02 billion that we did for the month of July. I mean, it's not an extremely comforting number, but perhaps already the higher cost of the dollar would have had its impact on some imports. So while we may not see exports grow because the dollar is cheaper, because these are usually contracted earlier, imports, especially consumer imports, and these days you can buy a great deal online, that could have had an impact. See, this is the only number we have at this point in time. So unable to, react too much just to one number. We will have to wait and see whether there is an improvement or there is a recovery in the, there is a fall in the import numbers as well, but still awaiting more data. But this is initially definitely a little bit, at least the trend, the direction is right. August exports are up 19.2. That looks like a good number. The year-ago numbers must have been affected by GST and stuff like that. So we just can't go with that number. The trade deficit number and the percentage number looks very good. I'm trying to get through to the mail to see if there is anything on PIB or on the Commerce Ministry website, so that we can, get more. The CNBC poll was 18 billion. CNBC poll was 17 to 19 billion. 18.02 is the previous month's number. I think we should get that corrected.
But I think
our poll was not that precise. It was a range. It was 17 to 19.
With a range of 17.6 to 19.
Okay, fine, fair enough. But there you are. That's the improvement in the trade deficit number. And we have Soumyakanti Ghosh, I believe, the Chief Economic Advisor of State Bank of India with us. Soumya, does this look like the first signs of some impact the rupee depreciation is having on the deficit?
Yes, but I think it's going to be too early. And one thing, Lata, the markets have missed out last month when the trade deficit came at 18 billion, because if you look into the data, large part of these imports were from Iran, the oil imports, and it was actually, I think, front-loaded. Okay. So I don't have the breakup from oil and non-oil. I think partly could be because of the depreciation, but that is too early to say, because the trend seems, if it is at all working, it will work only with a lag of 2 to 3 months. But I think mostly the oil imports could have come off because the volume effect may be absent this month. So that could be one of the most plausible reasons why the trade deficit has come off, because we were actually expecting a little higher than this 18 billion this month.
Oh, really? So that yes, definitely is good news. As you say, probably it was front-loading, and the July trade deficit was to a large extent affected by a huge amount of oil trade deficit. Let's see if we've got any more data coming in. No, that's about all we have. That's the only number that the Commerce Ministry, I think, has chosen to release, because it's something that will ameliorate the sentiment in the market. Are we seeing any recovery in the rupee? Yeah, it stands at 72.35 and the yields have gone down a bit to 8.18, 8.18. That also is a relief. Soumya, when do you think the rupee will start having an impact? What is your forecast for deficit, for instance, for September?
See, I'll tell you one more thing that I want to add over here.
Sure.
The other good thing, I don't know, I don't have the data, but if I was looking into the data, because of this continuous devaluation, the electronic imports, if you look into the data from China, this was actually holding at the same level for the last couple of months. So it had actually shown a dip in April, then it was at the same month from the month of June, July. So possibly there could be some also moderation on the electronic imports front because of the recent depreciation in the rupee value. But these are purely speculations, but if it's the current test, that could be one of the possible explanations. Regarding the trade...
Yeah, go ahead, please.
Regarding the trade deficit number, we have factored in a deficit of around close to 190 billion for the full year. So that translates into an current account deficit of around 2.8% as of now.
Okay. Thank you very 2.8%. Okay. Well, actually, that's about all the numbers we have at this point in time. It says August imports at 45 billion. That looks fairly big even now. That's up 25%. I mean, it's still not a very comfortable number, but exports are. We've got the export number at 27 billion. So, Soumya, actually, the unusual part is our exports have done better with a 27 billion tick, and the imports have come in at 45 billion, which is very similar to, I think, what we did last month we did 44 billion, that is July. August, the imports are 45 billion, so about a billion more, but exports are 2 billion more, and that accounts for the minor fall in trade deficit. Well, that's about all the details we have on the trade deficit number, but that is enough to perhaps cool the market's nerves. And so in addition to potential steps, we also have the trade deficit data at least indicating an incremental fall. Anuj, okay, we'll start closing bell in just a minute, and we will thank you very much, Soumya Kandighosh.